Welcome to our deep dive into Palantir's Q4 earnings report. We're breaking down the key numbers, analyst estimates, and growth forecasts that define PLTR's future. Before we dive into the details, please like this video and subscribe to the channel for more market analysis. Let's get into the report. This video is for educational purposes only and is not investment advice. Its content is based on general principles and is not personalized financial advice. Investing involves significant risks, including the risk of partial or total loss of capital. It is your responsibility to conduct your own research before making any investment decision. Starting with the big picture, we see Palantir Technologies listed as PLTR on the stock exchange. The earnings announcement date is a critical focal point for investors. Currently, Palantir maintains a high earnings quality ranking, or EQR, for the 62nd consecutive week. This ranking is a weekly measure of relative earnings quality compared to peers in the industry. High-quality earnings generally suggest that the reported figures are sustainable and accurately reflect the company's underlying financial health. We also see recent news regarding Palantir and Airbus extending their strategic collaboration, which highlights the company's ongoing expansion and solidifying presence in the aerospace sector. This overview sets the stage for a company that is not just reporting numbers, but actively growing its partnerships and maintaining a reputation for high-quality financial reporting. As we move forward, keep this EQR ranking in mind as a testament to the consistency Palantir aims to provide to its shareholders. Looking at the earnings per share chart, we can track the trajectory of Palantir's profitability. The blue bars represent estimated values, while the lighter blue bars indicate reported figures. A clear pattern of growth is evident from the first quarter of 2025 through the end of 2026. Notably, Palantir has consistently beaten expectations in several quarters, as indicated by the beat labels under the second, third, and fourth quarters of 2025. This trend of exceeding analyst estimates is a strong indicator of operational efficiency and better than expected revenue conversion. As we look into the 2026 estimates, the projections continue to climb, starting at around 0.2 in the first quarter and reaching nearly 0.4 by the fourth quarter. This upward trend suggests that analysts are increasingly bullish on Palantir's ability to scale its earnings over the coming year. The visual consistency of these beats and the rising estimates point toward a robust financial outlook for the company's core operations. The quarterly earnings surprise table provides a granular look at how Palantir has performed relative to consensus estimates. For the quarter ending December 2025, the reported earnings per share was 0.24, significantly higher than the consensus estimate of 0.17. This resulted in a massive 41.18% positive surprise. Similar trends were seen in the preceding quarters, with June and September of 2025 delivering surprises of 62.5% and 50% respectively. These figures are impressive as they demonstrate a consistent ability to outperform market expectations. While the March 2025 report showed a negative 50% surprise, the subsequent quarters show a definitive turnaround and a strengthening trend. Investors often look for these earnings surprises as they can trigger significant price movements in the stock. The data here confirms that Palantir has been on a strong winning streak, providing much more value per share than analysts initially predicted for most of the year. Turning our attention to the quarterly earnings forecast, we can see what analysts expect for the upcoming quarters in 2026 and early 2027. For the quarter ending March 2026, the consensus EPS forecast is 0.22, with 7 analysts providing estimates. What stands out is the number of upward revisions. 5 analysts raised their forecasts in the last 4 weeks, with 0 downward revisions. This sentiment continues through June and September of 2026, both showing 5 upward revisions. By December 2026, the consensus forecast rises to 0.33. This consensus data is vital because it reflects the evolving professional opinion on the company's future. The lack of downward revisions across these quarters indicates a high level of confidence in Palantir's near-term performance. It suggests that as more data becomes available, analysts are becoming even more convinced of the company's growth trajectory, moving their targets higher in anticipation of strong results. Broadening our view to the yearly earnings forecast, the long-term growth story becomes even more apparent. For the fiscal year ending December 2026, the consensus EPS forecast is 1.05, supported by 9 analyst estimates. All 9 of these analysts have revised their estimates upward in the last month, which is a powerful signal of collective optimism. Looking further out, the forecast for December 2027 rises to 1.54, and by December 2028, it reaches 2.03. This represents a doubling of earnings per share in just 2 years. While the number of estimates decreases for the later years, the upward trend in the consensus remains clear. This kind of multi-year growth projection is what often attracts long-term institutional investors. It shows that Palantir is expected to not only sustain its current momentum, but significantly accelerate its profitability as its software platforms gain more traction across both government and commercial sectors. The change in consensus chart visually tracks how analyst expectations have shifted over the past month. We can see the forecast for both the fiscal year end 2026 and the fiscal quarter end March 2026. 1 month ago, the estimates were notably lower than they are today. The bars for 1 week ago and current show a distinct step up from where they were 4 weeks prior. This upward migration of the consensus is a bullish indicator known as estimate momentum. It means that the smart money, the professional analysts who study the company full-time, are seeing new information that justifies higher earnings targets. Whether it's new contract wins, better margin control, or faster adoption of their AI platforms, something is driving a positive shift in sentiment. When consensus estimates move up like this, it often puts upward pressure on the stock price as the market adjusts to the new, higher expectations for the company's future financial performance. To reinforce the point about analyst sentiment, let's look at the specific number of estimates changed. For the fiscal quarter ending March 2026, there have been 5 upward revisions and 0 downward revisions. For the full fiscal year ending December 2026, the numbers are even more striking. 9 upward revisions and 0 downward revisions. This unanimous shift among analysts is rare and significant. It means there is no dissenting voice among the group of analysts tracked here regarding the company's improved outlook. When every single analyst who changes their estimate moves it higher, it creates a very strong buy signal for many momentum-based investors. This lack of downward pressure suggests that the company is executing its strategy effectively and that there are few visible headwinds in the immediate future that analysts are worried about. This level of agreement provides a solid foundation of confidence for investors looking at the 2026 fiscal year. Diving deeper into the estimate momentum, the text summary clarifies the magnitude of these changes. For the fiscal quarter ending March 2026, the consensus EPS forecast rose from 0.15 to 0.22 over the past month, a massive 46.67% increase. Similarly, for the fiscal year ending December 2026, the forecast moved from 0.79 to 1.05, which is a 32.91% increase. These aren't just minor adjustments, they are substantial upgrades to the company's earning potential. The fact that 9 analysts raised their yearly forecasts while none lowered them underscores the strength of this momentum. Estimate momentum is often considered a leading indicator of stock price performance because it reflects the changing fundamental outlook of the company. These significant percentage increases in expected earnings suggest that Palantir's business model is scaling even more efficiently than previously thought, leading to much higher bottom-line projections. Now, let's look at valuation through the price-to-earnings ratio. The PE ratio is a measure of how much investors are willing to pay for each dollar of earnings. In 2025, the actual PE ratio was a very high 215.37. However, as we look at the estimates for the coming years, we see a dramatic valuation compression. The PE is estimated to drop to 129.22 in 2026, 88.1 in 2027, and down to 66.84 by 2028. This compression happens because the company's earnings are expected to grow much faster than its stock price might. While a PE of 66 is still high compared to the broader market, it is significantly more attractive than 215. It shows that Palantir is growing into its valuation. For a high-growth tech company, this trend is exactly what investors want to see, a path toward more reasonable valuation metrics driven by explosive earnings growth. Finally, we look at the forecast PE growth rates to tie everything together. The growth rate for 2026 is projected at a staggering 67.2%, followed by a still robust 45.85% in 2027. These high growth rates explain why the PE ratios we just looked at are falling so quickly. When a company can grow its earnings by nearly 70% in a year, it justifies a higher initial valuation. The PE ratios for 2026 and 2027, 129.22 and 88.1 respectively, are the market's way of pricing in this exceptional growth. This data suggests that Palantir is in a high-velocity expansion phase. For investors, the key takeaway is that the premium paid for the stock today is being supported by very real and very large projected increases in the company's profitability. The alignment between high growth rates and falling PE ratios suggests a healthy, albeit premium-priced growth story. In conclusion, Palantir's Q4 earnings report and the subsequent analyst forecasts paint a picture of a company with immense growth potential and strong execution. From the consistent earnings beats to the unanimous upward revisions by analysts, the momentum is undeniably positive. While the valuation remains at a premium, the projected growth rates of over 60% suggest that the company is well on its way to justifying its market position. We've seen significant increases in EPS forecasts and a clear path toward valuation compression as earnings scale. This report highlights Palantir's transition from a high-growth speculation to a high-growth profitability powerhouse. Thank you for joining us for this deep dive. Don't forget to like, subscribe, and hit the notification bell so you never miss an update on PLTR and the broader markets. We'll see you in the next video.